Yo, what's going on, guys? All right, then. So we've got the weekly review of the breaking down the crypto, breaking down FX series. All right, I hope you're enjoying it. What we're going to be looking at tonight is we're going to be looking at what pairs have actually formed their levels and cycles. You know, these are things that I'm going to be going over on the charts. We're going to look at Ethereum in particular. We've been giving a lot of attention to Ethereum, but you know, I'm just gonna create this weekly review so you guys have got some structure if you are looking at certain pairs. I mean, this is my opinion. No way is it any financial advice. You know, have your due diligence when you're placing your trades. Keep your trade positioning light. You know, experiment, try things out. All right. And if you've got any questions, you know, just fire them away in the comments. All right. So let's get to it. All right. What's going on? Okay. So we're going to start off the weekly review with a few of the major pairs. All right. Then we're going to go into a couple of minor pairs, and then we're going to talk about Ethereum as well. So what we're looking for, guys, is I'm going to be going through some before and afters so that you guys can understand how levels develop. All right. And it's really important that you get the levels down. All right. And they're the hardest thing to understand as well. And it's only through continuous reviewing of charts that you're only going to let it absorb in your mind, and then you're going to be able to see it. All right. Because if you can't see it in hindsight, you're not going to see it in foresight. All right. And once you are able to understand the pattern, then you're going to understand how the cycles form out. All right. So we're going to look at dollar yen first. All right. And we'll bring up a chart from I believe this chart formed from the 21st of January. All right. So if we look at this chart here, we could see that. All right. So I spoke about this week on one of the pairs. It was last week. Yeah, last week on one of breaking down the crypto. Breaking down the FX pairs. And we mentioned about understanding the peak formation and where price would likely go based off the forming of the peak formation. So you can see down here how dollar yen formed the peak. At the point of it forming the peak, if you notice up here, you can see behind this dashboard it says 2 PFH, which is down here. So that is 2 days away from the peak formation high. So if you were to trade any of this downtrend here, all right, any pullbacks to the 200-day, as you can see here. So let me just zoom in there. One pullback, you got a pullback there, and one break, another fake out and pullback. All right. If you were to trade that, you know, you would have been in line with the peak formation, because we always need to trade away from the peak formation. All right. We're only looking for shorts. Okay. And you've got a couple of things that work in confluence with that as well. All right, you've got the fact that every time price attends to the 50-day, all right, it's rejecting it, pulling back again to the 50-day and the 200-day, rejecting it, trying to close above that, breaking away from the 800 EMA. All right, we need to pay attention to candlesticks, all right, and where they are in relation to the moving averages, and where they are also at key points, because you can see these big green lines here are the true psychological support and resistance. Now these green lines form every single Monday, and they go across the screen throughout the whole week. All right. So when price rejects this area here, all right, you know that it's a strong support and resistance area. All right. And then when it breaks away from it, you know it's a strong support and resistance area. I mean, just pay close attention to what price did in this area here. Completely obliterated this support and resistance area. All right. So, you know, even if you were to set an entry at the break of this line here, you know you're good, because when it breaks away from it, it's a strong psychological support and resistance area. So anyone that was down here, okay, that thought that price was going to bounce away from it, got their money in good, thinking that it was going to continue to the upside, completely got their stops taken out. All right. So looking at this chart here, we anticipated that because the peak formation had been formed, all right, because it achieved its ADR for the week, okay, at that point in time, we knew that by dollar yen forming a W formation, as long as it kept price within this area here, I mean, guys would see that as a double bottom, all right, that's fine, all right. But we knew that once this double bottom here, or W formation, had formed, we were expecting price to come out of this area here. All right, because if it hits the area again and doesn't break, as you can see here, it's formed it at the initial initial low, the Asian initial low of the day. All right, you know that your effectively double bottom as such had been locked in. All right, and that was confirmed with these shifts. As you can see here, you can see the candles shifting. Now look at these two red candlesticks here. All right, these red candlesticks are the market maker's way of inducing traders to go in short. All right, so they whack price down, they sent price down, tested it, grabbed all the guys who went short, and then they trailed price up. And if I'm correct, this is about between 25 and 50 pips. So let me just bring up this here. So entry from there. All right, so 20 pips nearly. All right, if we base it at the low of here, okay, we've got ourselves 22.5 pips. All right, now every retail trader's book on trading will tell you set a stop loss between 20, 30, 40, 50 pips, depending on your risk reward. All right, and it's not by accident that the market makers reverse price 22 to 23 pips. Why? Because they're absorbing all the short stops. Okay, they're taking out all the stops of the guys who thought, right, I want to get in on this trend. They break out from this point here. If it breaks this area, I want to get in. So look how aggressive those candlesticks are right there. All right, so they formed the low. They did exactly the same again, but this time they shifted the zone. They pulled completely away from it. And as you can see from here, that's exactly what happened. Even if you were to enter on the confirmation of this candle here, yeah, they would have brought price right back down, you know, because they want to just suck in that little bit more liquidity and make it look like it was rejecting the 50-day, which is exactly what it did. But it didn't break the formation at the bottom. So you're good. You know, your entry was good, even if it was here, even if it was here. All right, you could set yourself a stop. I mean, look, let's look at the stop. If you were to enter on this candle, on the break of this candle here, set yourself, even if you gave yourself an 11 pip stop, all right, you would have been fine. All right, an 11 pip stop down there, you would have been fine still. Your trade would have been good. All right, so then what we anticipated was once it had broken out of this range, it tested the 50-day, the 200-day, came back and it tested the 50-day. We effectively had achieved level 1. Okay, so level 1 starts once the formation has been completed. Breakout to the upside, shifting the zone. All right, look at these aggressive candlesticks. They're pushing up, pushing up. All right, they're taking out the guys stops in this area here, and they're also getting ready to get their longs that they have been building in these areas here. Okay, remember, when market makers are sending price down, they are making traders believe that there is a short market. What really is happening is the market makers are building their longs at lower prices in anticipation to close them higher at a later point. All right, and this is exactly what's happened here. So we knew that once level 1 had been formed, we were expecting consolidation. All right, and then an attempt to take out to start level 2. Level 2 started around this area here. So let's go to the main chart and we can see it in plain sight. So level 1 up here, level 2 had started, and then level 2 worked its way up. We know it's a confirmed level 2 if the previous level 1 had been broken. So that previous high right there, as long as that is broken, all right, then we know that we're working for level 2. And that's exactly what's happened. So level 2 was now in play. Now that we've got level 2 formed here, we know level 2 has ended. All right, and now we're looking for level 3. So if we're to mark this off here, level 3 start, and what we're looking for from dollar yen, okay, is a move to the upside, start getting choppy in this area, all right, and then start moving price down again. Now, how far it moves up to form the level 3, we won't know, but it's consistent with its ADR. All right, so if we work out the ADR range itself for dollar yen, we know that dollar yen's ADR on average is 53 pips, and it's the ADR times 3 is 159. So in a week, it would have moved 159 pips, okay, Notice the number 3 again, guys. One level is ADR 53 pips, all right? So from here, you've got 32 pips, all right? From here, you've got yourself 40 pips. Now remember, it doesn't have to achieve the ADR to the pip, and not some cases it doesn't. Some cases it over exceeds it or it's below it. Give yourself that, don't be just subject to thinking, right, if the ADR hasn't been achieved, or saying from here, if the ADR of 53 hasn't been achieved, look, it's 33 pips here. All right, so we're effectively 27 pips away. Okay, and we're thinking, hold on a sec, it hasn't formed the ADR, so does that mean that it's not a valid level? It's variation, guys, all right? There has to be a variation. Don't think that because it hasn't hit 53, that's not a level. It's always a level. Let's look at it closely. 1, 2, 3. 3 pushes. That's them shifting the zone, all right? That's a level, all right? The high has been formed and now it's bringing it back. Once price pulls away and consolidates, that a level effectively has been locked in. Then for it to be confirmed for the next level, you want it to take out the previous level here. All right, and that's exactly what's happened. Okay, so with dollar yen, we're anticipating a move to the upside and then a new peak formation to be formed. All right, I mean, look, guys, back to if you were paying attention to the other videos with Ethereum, okay, when we're talking about the M levels, the M1s, 2s, 3, 4, and 5. All right, just pay attention here. Look, you've got M2 here. All right, look where the activity is on M2. M2 is when the market makers pushed price out of it and showed support, okay? They brought price back down to confirm that the M2 level was solid, all right? This area here was effectively where the peak formation had been locked, all right? The peak formation had been locked, and on the chart, it would have said, peak for weight, it would have changed from M2, which is here. On this chart here, you'll see down here it says 2 peak formation, all right? And now it says 1 peak formation low, all right? So now we are 1 day into the cycle. We're the first cycle away from the peak formation, all right? Now we've worked the second cycle, all right? So this is level day 1. This is day 1, the first day, all right? The next session, so Monday's session, will be peak formation 2. So that will say peak formation 2. All right. Now, what we're looking for, all right, is dollar yen to exceed that level, pull back slightly, form level 3 peak formation and go back down. Okay. So if you're going to plan on trading this, be sure that if you're going to trade into level 3, because we're waiting for level 3 to form. All right, level 3 is a bit of a choppy area. Now, price could actually zigzag all the way up and then form a peak formation and then drop, or it could just shoot to the sky and then form the peak formation and then drop again. All right, just be sure that you want it to break away from this area here. It has to show a clear break from this previous point here before you're actually considering an entry. All right, you can enter on the way up. I mean, look what's happening here. You have got effectively a W formation right there. Another W. So when the Asian session opens this evening, all right, Sunday, all right, you want that formation there to be locked. All right, it might open down here, might gap down, it might gap up, okay, but you can see the market makers effectively set up a formation, okay, on Friday. So they get certain traders trapped in this area here, all right? Now you can have main peak formation and you can have another smaller formation, all right? It's variation, guys. Now there'll be W's and M's all over the place. You could even consider this as a W, okay? Or it's an M, all right? But because we are in a cycle still, we've come out of level 1, we worked level 2, they can change it at any point, guys. They could just send price all the way back down. But we have to look at what's been going on in the grand scheme of things. It's been going down. All right. New target has been, their target has been achieved for the week there. So now they've got another target. All right. So we'll be looking to see this level up here. All right. It's variation on the theme, guys. I know it sounds tricky, but as time progresses and you notice, you go through the videos all the time and then you're looking at charts all the time, you'll start to see variations on it. Okay. So that's dollar yen. We're prospecting that dollar yen's going to be back up in this area here. You can see the psychological line here. All right. So it will retest that main psychological point. Got support down here, support at the 50-day. You got the other MAs working in junction with dollar yen. You've got the 800 looking like it's turning upwards, and the 200-day hopefully will break through that. Okay, so there's a lot of confluence happening to support that this move is going to go up. All right, but we need to wait until at least the close of Monday. All right, remember Monday is the false week beginning. All right, Monday sets up the false moves. Okay, so just be aware. I don't trade any Mondays. I don't take any trades until Tuesday. That's when it starts. All right. Okay, so we've looked at dollar yen. We're going to look at Gbp USD. All right, so Gbp USD has been quite interesting. A lot to learn from Gbp USD. All right, I'm going to pull up the chart, Gbp USD pattern. Okay, cool. All right then, so we've spoken about Gbp USD. We drew a pattern. We could see the peak formation that was here. All right, so in the week it formed last week on the 15th, 14th, 15th. All right, formed a peak formation here. Level 1 drop, level 2 drop, level 3 peak formation right there, and then it repeats again. Form up, level 1. Okay, pull back, consolidation. Came out to retest it. It did it here and then it pulled back. So we're not really confirming that as a full level 2 yet. Okay. But you can see it's come out and completely taken it before it consolidated again. Okay. That would form the level 2. And then we're expecting the level 3. Now this level 3 happened very sharply. Okay. So it moved up and then spiked the high and then pulled straight back, which then effectively would work as a reset. All right. So once the reset had been formed, we have got another W in this area here. So it then starts again. So the main peak formation down here, W formation at the 200-day, level 1, level 2, new peak formation, spike to the high, pull back, spike again, pull back, spike to the high, pull back. Now you can see what's happened with Gbp USD. All right, it's dropped. The peak formation has been locked. Okay, pull back down. We've got level 1. Now we're working level 2. Okay, so exactly what we said here. Drop, rise, and pull back down. Now, if I'm trying to find the chart of Gbp USD, get that chart up for you. For some reason, here we go. Perfect. Okay. All right, so if we look at the date, the 14th of January, okay, 14th of January would take us to, no, that's the wrong one. That was in this peak formation here. Forgive me, but we can learn from it still. All right. Peak formation right down there. So before this move happened, okay, all of this, we anticipated that dollar yen, Gbp USD, all right, would form a pattern up here and then it would come break down the 135990. Okay, that's exactly what it did. It took out the 13599 down here and it formed this move here. So you know, the peak formation had locked in good there. But I didn't actually get a before and after for Gbp USD, okay? But if we look at GBP Kiwi, okay, it's exactly the same behavior had occurred, all right? So if you look at the Kiwi, usually the majors are going to reflect on what the minors do as well, all right? So you can see head and shoulders, excuse me, head and shoulders area, okay? pull back, drop. All right, that's exactly what happened here with GBP USD. We'll bring up the chart for GBP Kiwi, and that's exactly what happened there. All right, so the move up, they brought, so this here, okay, was that move. Is this an hour chart? Let me just see. Yeah, that's the hour chart. All right, so if I bring the hour chart on here, come on. Oh goodness, what is that? I'm still having an issue with my internet. I don't believe it after speaking to them. Okay, right, here we go. So we got the hour chart right there. There we are, we're good. GBP NZD. Just to move right there. No, we were wrong on the GBP NZD. We were still in the cycle. Look, if I bring up that chart there, okay, if you notice that bit there, pull back, came up, and it moved up. So this chart is quite old actually, sorry. It moved up, we were wrong on this chart, but it went up before it was going to move down. And that's exactly, actually, to be fair, what it's done, okay? It has moved up and it's then dropped down, okay? Which is consistent with cables move here as well, okay? So that cables move, drop down, and then GBP Kiwi, exactly the same, okay? So they're moving the majors as well. All right, so you got peak formation. This formation here, because it's an hour time frame, if you look into the 15-minute, all right, you will get yourself, see, it's a small W, a small M. So you got 3 pushes to the high, M, pull down, up, down, off we go, first zone. So sterling, okay. Yeah, Asia M, sorry. God, I'm confusing the hell out of myself here. All right then, so let me just do the levels for GBP USD. So, come out of there. So we anticipated that the fact that the M formation had been formed here, we got level 1, okay, it's level 1. So we've got level 1 is here. Level 1 right there. Now we're waiting for level 2 to be formed. Okay, now level 2, because it's Monday, might actually look like this. All right, so Monday will be false week move beginning. Okay, so they could actually open tonight in the Asian session. They could send price up here. All right, manipulate everyone on Monday, and then on Tuesday they'll work it down. All right, they may even do another M pattern in the from this point here, so they could move price up, M pattern, and drop down, continue like that, okay? Because it's Monday, false move week beginning. They've effectively trapped the guys who have gone long here, okay? Or sorry, trapped the guys who went short here, all right? And they know that guys are going to probably step in and go long. So now they're going to try and get more shorts at higher prices, all right? So they'll probably send price a little bit further up, do another M formation, and then drop down to confirm the start of level 2. So this is where level 1 ends, and we're now waiting for level 2 to be formed. Okay, level 2 will only be formed if we break this area here. All right, and in conjunction with what GBP USD has been doing, okay, we're looking at the fact that it's been rising since this peak formation. Look at this level here, man. Look at this rise. Remember, market makers are getting their money in good. Okay, they're getting their shorts filled at higher prices, taking a quick dump there, a reset, and then continue back up, formation, and now they're going to ride price all the way down. Okay, if you notice, bringing it back into the range for a new week. All right, these are the key support and resistance areas here. All right, they've been building their shorts at higher prices. Now they're going to want to make money off it. All right. Remember, the market makers, they have so much money to give out, but they also have to claw it back in order to make a profit. All right. So for GBP USD, we are effectively waiting for level 2 to form. Okay. I mean, tomorrow, Monday, they could actually just smash all the way through down. Okay. But the market makers can't really afford to do that. They need to induce more liquidity. All right. So we're going to see a brief consolidation, probably a spike to the high. Okay. M pattern and then drop. All right. But don't place any trades until at least Tuesday. Start Tuesday morning London session, because in the London session we could get a stop hunt rise and then drop down. And you don't want to be caught in that stop hunt in the belief that it's going to take out this new high here. Okay, if this cycle, okay, is consistent with the market makers' intentions, all right. I mean, if it could go take out this area here, you don't know, all right. But based on how price is behaving, we should be seeing a move to the downside. Okay, so that's GBP USD. We're going to look at Kiwi Yen. All right, so Kiwi Yen, the peak formation was there. I'm going to look at Kiwi Yen. Okay, Kiwi Yen is here. Let's get that up for you. So we've got peak formation, Kiwi Yen. Let me just make sure that it is Kiwi Yen. Let's have a look up here. Yep. All right then, so peak formation formed, level 1, now working towards level 2. Okay. We effectively hit the range daily high over here, which is what's happened. So you got the green candlesticks there, that Asian session there, came up, pulled back, tried to take it, failed. So it's level 1. We are still in level 2. We are still in level 2. This here now, guys, this whole area here is level 2. All right, we've got level 1. All right, level 1 breaking out here. Level 2 takes it, okay? But because we haven't clearly broken out, okay, to form the other peak formation, level 3, we are still in level 2. So level 2 start and level 2 has ended in this area here, okay? So level 2 ends here. We are still waiting for level 2 to be confirmed and finalized, okay? So level 1, break up. Level 2 starts at the break of here. Now level 2 hasn't made any traction to the upside, so we're still trapped in level 2. All right, what we're waiting for is effectively a move, as we're seeing here. We're waiting for a move up, stop hunt low and rise, break out, take that, and then peak formation back down. Okay, but I'm gonna take a screenshot of that so that we've got it down for our records, so that we can refer back to it, so that it helps you guys see how patterns form out, how the peak formations form and how you understand the levels as well. Okay, let's close that. Let's close that. Okay, yeah, so this is what we're looking for, guys. We're looking for clear breaks. You can see the support, the confluence. Yet again, guys, you're looking at it in plain sight. Support at the 50, support at the 800. You got the 200 support, and now you're at the 50. Okay, you're seeing it happening over and over again, so you know that you are expecting a move to the upside. Why? Because they've already been dropping price down. They've been, as I said from last night's video, we've got 1 cycle down, 2 cycles down, back up. That's the trend. Okay, 1 cycle, 2, reverse up. All right. Same with it going upwards. You've got 2 cycles up, cycle drop down. Okay, it's about working out where you are in those cycles. All right, you can see from here, drop there, and then you've got the drop, and then we've got formation, and then up we go. All right. When you're trying to determine a level, all right, just keep in mind, once the peak formation has been formed, price needs to shift away from it. Why does it need to shift away? Because the market makers have been trapping up all the traders down here. They've been getting their longs filled at lower prices. All right. That in the meantime, they are getting retail traders in the belief that it's a short market. You know, it's a bearish market. You know, guys, get in. You know, go short. Dollar yen's tanking. When what's really happening, I mean, look at the climatic behavior here. Red candle, push down. And the guys that got in here were pretty much screwed. Okay, they were done for because the market pulled away and they're thinking, yeah, we're in a continuation to the downside. Love it. We're going to enter here as well because it's tested the 50-day and it's rejected it. Let's get some more shorts. And before you know it, they're staggered. Keeping guys trapped in this area here. All right. Moving price slightly, ever so slightly. I mean, guys are saying here that this is indecision. The small candlesticks building up here is indecision. The bulls and the bears don't know where they're going. The market makers know exactly where they're going, guys. All right, that's all cock and bull. All right, that's your retail traders' books that you buy off Amazon. All right, they know exactly where they're going. What they're doing is they're just grabbing up and keeping guys in the illusion that we're in a downtrend on dollar yen and it's going to probably continue to the downside. Retail traders would look at that and say, oh, the bulls aren't able to step in. You know, there's weakness. They're not able to, you know, send price up. Oh, I don't know what's going to happen. You know, I'm going to go short. Forget it. You know, and then this candle here makes retail traders believe, oh, right, you know what? The bulls are actually going to take over now. Let's get in. And then, oh no, we're rejecting the 50-day. I'm going to stick with my short, you know, spike to the high, pull back. All right. And it's at this candle here where they completely screw every retail trader because they just broke up. They hit the 50-day. They broke away from it. All right. Sent price down here, confirming and locking in all the retail traders who went short. And then they snap price all the way back up here. All right. And then you can see they took out all their stops by going all the way up there. Look, funny how from at this point here, should I say, yeah, close of this candle here. It's a 56 pip move. All right, a stop hunt completely screwed them. They shifted the zone. You know, look at these aggressive candles here. Shift, breaking past the 200, going all the way to these highs here. Completely screwing all of the retail traders here, taking out all the guys who got margin calls in these areas here. You know, but what we're looking for the W formation, which is exactly what happened. So if anyone was to take this as a trade, I took this trade. I came on the entry on the close of this candle here. Happy days, 50 pips locked, done. Sorry, it was 34 pips if I remember. Yeah, so about 35, 40 pips here, up in this area here, done. All right. So that is Kiwi Yen. So we're waiting for a clear break here. Okay, Monday we'll just keep price zoning in this area here. We might even get a break to the downside here, but the true trend is to the upside there. All right, so keep an eye out for those levels. All right. New Zealand Swiss. Yep, so here we go. We had a peak formation which we drew on the 21st. Yep, Friday, we drew this on Friday. So sorry, here we go. So another cycle. All right, so I'm going to get the chart up for that. Here we go. So Kiwi Swiss, we had the peak formation low here. So if we look, there you go, 19th of January. If we look closer here, we have got 19th of January peak formation right down here. Those candlesticks there, okay? So we formed the peak formation, all right? And we're expecting the levels to be taken. So we got level 1, level 2, break, peak formation, all right? And here it is. So going up, all right? We've got level 1, level 2, level 3 forming the peak formation, all right? So consistent with here, level 1. I called this one level 2, all right? Because level 1, level 2, and then into the peak formation straight away. So I was right here. Level 1, I was wrong calling that peak formation, level 1 down there. So level 1, crossing here, okay? Level 2 start, and that's exactly what happened here. It started down here, well, it started from this point here, okay? It had such strength. So level 2 was just, I was expecting it to continue down to retest the 50-day, and it didn't, all right, because of the strength behind the move. So level 1 had been formed here, the end of it. Level 2 start. Level 2 would need to be confirmed by a break of previous level 1. That's exactly what happened, all right? So it's pushed up, pulled back. Now we're waiting for level 3, and level 3 is formed. We got M pattern, and then they shifted the zone, came back, retrace, level 1 end. We've got level 1 end here. Oh God. Level 1 end. Okay, now we're waiting for level 2. Now you notice it's broken out, so you guys will think, yeah, it's level 2, this is level 2. It's not level 2. Why? Because they brought price right back. All right, so we are waiting for effectively drop to the downside, price reverse up, and then we're looking down for level 3. Okay, remember, Monday's week beginning, it's a false move. They might even send price further up, or they could actually confirm level 2 and keep going down. Once this area is broken here, we've got ourselves effectively a level 2, okay, going into level 3 peak formation, which will be a W pattern here, okay? So that's New Zealand Swiss, all right? I'm gonna look at Ethereum now. All right then, so Ethereum, okay? You can see from Ethereum's behavior, we've been watching this all week. We were watching this from this peak formation down here, and we had another peak formation there, and then a switch up to an M formation right there. You see, not always the peak formations play out. Look what happened with the New Zealand dollar. Okay, it didn't play out. But what you can see here is, what you can see is Ethereum. We were talking about the live yesterday that it would need to take out this area here to confirm that its level 1 is completed. All right, so level 1 has been completed. We're now working level 2. All right, now level 2 looks like it's formed up here, and we are now waiting for another push to the upside to test out the range daily high. So will Ethereum hit 1367? I think it will. By the end of tonight it will, okay? Because remember, look, M2 pattern, all right? M2, it's confirmation of M2, but it's at the pivot. We're looking for M4 target. There's your M4 target. Hit right there, M2, M4, all right? Support's coming at the M3, so we could now be looking effectively at M5. There's nothing wrong in hitting 1416. We could hit that. We could see that, you know, because we've now got a test of the 50 days, rejecting price in this area. The EMAs are now starting to fan and point upwards, so it would imply, retail traders would believe, that momentum is to the upside. What's happening is the market makers are now going to get aggressive and move price to the upside and form an M pattern, okay, to bring price back down so they can get some money back from the shorts that they've built on the way up. But remember, guys, Ethereum, crypto now is about buying and holding as such. If you're going to trade it, you know, be careful when you're trading it on an intraday. You know, find a broker that's going to give you a decent spread. I mean, look at the wild ass spread right there. Okay, you don't want to be caught with a massive spread. Okay, so just trade mindfully when you're doing intraday trades with Ethereum. All right, if you're looking for entries to go long term, it doesn't matter when you buy. All right, I mean, you could really make it surgical and enter, say, here, okay, and then ride it, assuming it rides all the way to M5, for example. All right, you would have got yourself a good entry. But if you're buying in anticipation to sit through the speculation of Ethereum's value over time, you know, going through this is just like a bit of a sweetener to let you know what Ethereum is doing. So, you know, you can watch these videos and understand how it moves to the upside, all right, or the downside, you know. But where we are right now with Ethereum, based off the last video talking about Ethereum's behavior, you know, it's consistent with what we were talking about. You know, market makers are keeping price in this area, forming a W pattern, and it's pushed it up. I mean, if we look at, we get the So this is what we were talking about on TradingView. We had drawn this W pattern here, and we need it to break this level here, and it did just that. And one of the guys that came into the live, Gabo, he said that it will hit 1350, and I held him to it. I said I agreed with him on that, and it did exactly just that, to a pip, man, to a pound. Look at that. It hit 1351.94. You know, what a shout out by Gabo right there. Now what we've got here, we could effectively be seeing some interesting behavior right here. We could actually be forming another W. Whoops. One W there. Oops. We'll put up. One there. Drop down. And then we've got to move here. You know? Could we see that happening here? Yep, same principle here. All right. So guys, we will never know what it's going to do, but all we can do is work with what we are seeing in front of us. Okay? Based on that behavior. All right? You know, based on what they're doing at certain points. We can say now that its support is at the 50-day because they're rejecting prices in that area. What they're really doing is they're absorbing the liquidity from the guys who have entered from here, taking out stops, using that liquidity to send price higher. All right. Now, other than that, guys, I think that pretty much covers the weekly review. You know, if there are any other pairs that you guys want me to do, then I'm happy to do them because, you know, Monday, false week beginning. All right, I can do a video later on or for Monday as well. All right, so, you know, just give me some pairs and I'll just break them down for you guys. All right, so there you have it, guys. You've got the weekly review put to bed. And we spoke about the Ethereum movement as well. So if you guys got any questions about levels and what have you, I mean, I know they're going to be coming to me because you guys have been asking the questions. I'm in the process of getting this video ready for you, you know, where it just talks about the levels. But there's no other better way in learning than seeing it happen in real time. All right, because the more you go over the levels, the videos, you're going to keep seeing the same thing happening over and over again, guys, and that's the best way that you're going to understand it. All right, because I'm taking the videos effectively in real time. Okay, it's going to allow you to see it happen from that point. All right, so if you have been watching this video, thank you so much, and if you're new here, make sure you grab the subscribe button. You know, I'm just doing this for you guys, trying to create value and help you guys understand the markets. Because the way it's engineered and the way they built these markets is only for the market makers to win. All right, it's not designed for traders, retail traders to win. We are the bait. It's our money they use to effectively make a profit on. All right, but we need to switch that up. All right, so much love to you guys, and seeing you soon.